Hello, I'm Lisa Dwyer, and this is Mortgage 101. I am so pleased to be here for you. I'm going to be here to help you understand everything surrounded about your mortgage, saving money, appraisals, inspections, title insurance, settlement statements, the whole process of getting a mortgage and trying to save you money, save you time, and maybe some stress, and just to educate you on all of these things. I'm not here to tell you that I'm the best loan officer or that I have the best rates or the lowest fees or anything like that, because I just want you to understand it. I am available for answers if you have any questions during the show. Sometimes I get really excited and we start speaking too fast. You can call me, you can email me, and I will definitely take the time to sit with you individually and try to help you out. Today I have a very special guest, Karen Popilek. You may have seen her on other shows.
Hi, thank you.
Thank
yes, great
you.
to be back.
Thank you so much. You're from Transnation Title.
Yes.
Been in the business for what, 25 years?
25 years, yes, yes.
And today is a really great show. We're going to talk about settlement statements.
Yes.
This is the statement that you get at the closing after you've been through the grueling mortgage process.
The whole
Everything's
process, yes.
done, and now you're closing on your loan. Whether it be a refinance or a purchase, you still get a settlement statement.
Right,
And it's
absolutely.
called the HUD-1.
HUD-1 settlement statement, as
Yep.
long as there's a mortgage company involved.
Yep.
If there's not a mortgage company involved, you'll get a buyer-seller statements. The state requires the HUD settlement statement for the lenders. Buyer-seller statements are required by the state for the realtors.
Perfect.
So you have those. Now, I think everybody has a HUD settlement statement somewhere in their file drawer, though.
And they change them. They did change them a couple years ago, and are they changing them again?
They are changing them again. We're going to go over this today, and in a year, they'll be changed again. Sooner, maybe. You have the government involved with what we're doing now, so there's changing all the time. It's fun stuff. I love relearning everything. That's what, 25 years, and I still don't know anything because I never know what we're going to be doing next. Oh, fun stuff.
All right, so let's start with the settlement. Let's start right up at the top. If you have your settlement statement at home, go grab it. It's probably in your title package, your folder.
Right.
And you can kind of follow along with us. If you want me to go over yours with you, just if there's anything that you wanted more clear understanding on, I would be happy to do that for you as well. Okay, so at the top of the settlement statement.
At the top, we have, okay, so the type of loan you take out is usually at the top of the loan or at the top of the settlement statement. Conventional, FHA, VA, cash sale, it'll mark there all the time. And then our file number, your loan number, mortgage case if it's FHA. So basically you have across the top the type of loan that you're going to be doing, and then your title insurance company's file number that relates to the file for them.
Right, sure. And that's if you ever need anything from your title company.
That's the number
something
you
that
want to
they've
give
done.
them.
Yes.
Yes.
When they say, "What's your file number?" It's not your loan number. It's as much as your file number. With
yeah, for the title company.
Yeah.
Right.
Okay,
And
great.
then, and most title companies, or all title companies, can find your file from your last name and your property address. Just
Right.
But it's easier for us if you have the file number.
Sure.
And then it shows, of course, who the borrower is and who your seller is. This is the purchase settlement statement first, and then it'll have your lending company, and then your property, the property that you are purchasing or selling. Excuse me. Yeah. So the purchasing or selling, which is sometimes different from what the seller's
addresses,
is.
right.
And then the settlement agent is your title company, and then the date, and then place. So now it is required. Before, we used to just be able to populate our address. The title company would just populate their address in there because it wasn't such a big deal to have the title company's address in the settlement agent name and place of settlement. Well, now regulations state they specifically want the place of where we're closing. So specifically where it closed at, that address needs to be in that box now for us.
Very good.
Lots of different changes.
Yeah, and the settlement date. And now when you're refinancing, your settlement date and your fund date are going to be two different dates.
Two different things, yes.
Because there's still a 3-day right to rescission.
Right, for the refinance before
Yeah.
you disperse.
Yeah, so you may close on Monday, but you're not getting your money until Friday.
Right.
So don't call and ask about it. It's not happening.
Don't ask if you can waive the 3 days.
Yeah,
It can't be done.
Nope, it is a law, 3 days.
3-day right of rescission. It's your remorse time to think about it. Yeah.
Right.
And I have a lot of people ask me about the 3-day rescission for purchase. They like recently they were signing it and they said, well, we still have 3 days to think about this, right? And No, not in a purchase
No,
transaction.
when you purchase, you are straight up. It's right now.
It's
You're
right
getting
now.
the keys. You're giving the money.
It's done. You're transferring the property from the seller to you, and the reason is because when you sign the purchase agreement, that is kind of your time.
Sure. Yeah. You have 45, 60 days, depending how long it takes us to get your mortgage done.
Exactly. So you don't have the 3-day rescission period on a purchase. So you know it's that day is real time, and that's when the transaction transfers.
And before we start with the HUD, I just want to go over real quick. A lot of these numbers that you're seeing on the HUD come from something called your good faith estimate.
Yes.
So as a mortgage person, right, as a professional, I'm going to give you all of these fees to the best of my knowledge before we even move forward. So when you're signing your application, I'm giving you how much your title insurance is going to be. What are your tax prorations? What are your escrows going to be? What is your closing costs going to be? What is my fee? What is your credit? What is your appraisal? All of these things are given to you way before you get to the closing. And if there's any changes, you do have to re-sign them. You have to re-sign the good faith estimate because we have rules because of there's bait and switch and things like that where some I would say, I don't want to step on any toes, but unprofessional or unscrupulous agents or loan officers were kind of telling you one thing, and then at the closing you were getting a different number. So, oh, your closing costs are $2,000, and then when we get to the closing, it was actually $5,000. So they've stopped that. They've put a kibosh on that. That's not going to happen anymore to people because any time that something changes over a certain percentage, you have to re-sign it, and you can't close for 3 days. Until that is back in the system for 3 days. So there's a lot of protection, consumer protection that's happening right now.
Absolutely.
And sometimes it may seem cumbersome to you as the client, right? Oh, I have to re-sign this again? Well, it only changed $25 or it only changed, $300. Well, that is to protect you. So we only do things like that to protect you. That's really what it's about. So you've already seen these numbers. These numbers are not a surprise to you. There's a few things that come on at the end that we don't,
once in a while, but they're, very rare. And sometimes it's additional recording fees or wiring, things like that might come up. But there shouldn't be too many different fees that come up from the good faith that your loan officer gives you to the time when you get to the closing table.
Okay. All right. So we're going to start just on the one side here, and this is the summary of borrower's transaction. And we're going to go through that just line by line just to help you understand how this works. So go ahead, honey.
All right. So on the left-hand side, you have the buyer side, and you have the sales price when you're purchasing a home. So you have the sales price of what the dollar amount is, and then it would go into the settlement charges. Now, the dollar amount that's in the settlement charges column is explained on the second page of your settlement statement. So that it's a lump sum brought forward from the second page.
Right, and there's a lot of that with the HUD.
Right.
I think this is, we look at the summary more or less, right? Is this like the summary of what's going on in the second?
Yes.
Yeah, so the first page of your HUD settlement is really the summary of everything to follow. And some HUDs are what, 3-4 pages depending?
Now, I think there are 5 pages required.
Okay, so depending on if refinance, purchase, lender, there's a lot of differentiations. Okay, so we're going to take a break. We'll be right back, and excuse me, we'll go back and really go through this HUD.
Okay.
So thanks for watching. We'll be right back.
We own a Habitat home.
I love working on my Habitat home.
Soy dueño de una casa de Habitat.
My neighbor is a Habitat homeowner.
Being a Habitat homeowner has changed our lives.
My mortgage payment for Habitat is less than what I paid for rent.
Habitat for Humanity of Oakland County currently has homes available with mortgage payments lower than most rent payments. If you or someone you know needs decent and affordable housing, call 248-338-1843 or visit our website at habitatoakland.org.
Welcome back. I'm Lisa Dwyer. This is Mortgage 101. I'm here with Karen Popilek with Transnation Title, and we're talking about your HUD settlement statement. So, okay, Karen, so we were talking about how the first page of your HUD is a summary of the second page.
Yes, so the second fee actually on your settlement statement should be a summary of the second page.
Okay.
All right, so there's, like on this particular settlement statement, I did just a tester. I mean, I have Robert Byer and Barbara Byer and Stevens
Right,
seller.
sure.
And,
It's a
yeah,
sample.
Yeah, sample thing. So on the front page, the sales price on this is $104,500. Their closing costs are $3,277.84. Now the breakdown of that is on the second page. And the left column is the buyer side. So in the first, up at the top 700 section is realtor costs. So the commissions are there, and any commissions or transaction fees to the realtors are in that box. The next 800 section is closing costs. So you'll have your origination fees, your appraisal fees, your credit reports, your flood certification, tax certification, any fees that are in there from your lending institute. The next one is interest. So you have prepaid interest that you're going to be paying. And then upfront MIP, if there's MIP on the loan, which is private mortgage insurance, PMI. And then homeowners insurance will be in that box. The 1,000 section is your escrows. So if you are including your taxes and insurance into your payment, that is where it's broken down.
And this to me is, so people just don't understand this. So we're going to just slow down just for a second to explain exactly how that works for people. So they say to me, why do I have to pay the whole entire years of insurance up front? Well, I'm paying it every month, so why should I? So I don't know if you'd like to explain that to them, how that works.
The homeowners, it has to be, so your escrow account collects. So obviously you have to pay the whole year up front in your homeowner's insurance first, because when you make your first payment, which is usually a month after your closing, there's not enough money saved in that escrow account to pay the insurance.
Correct.
So it's a savings account. So you have to start full, and so when you get to the next point, so you're actually starting empty. So you have to start paid off though, because the mortgage company will not give you a mortgage unless you have homeowners insurance. So the house has to be insured, so you have to pay your policy off immediately.
Correct.
Pay it for 1 year, and then it breaks down to a monthly dollar amount.
And this is how I try to explain it to people. I tell them this: you're paying for future taxes.
Yes.
So if I close you in January, your first payment isn't until March.
Right.
And when's the summer taxes due?
July.
Okay. So you have April, May, June, July. You have 4 months.
Yeah.
Are you going to save a whole year of summer taxes in 4 months? No. So you have to put that money in an account, which is called an escrow account.
Right. Mm-hmm.
And then you'll have whatever the difference is. So you'll have 4 months to pay the regular monthly amount, but you're going to need 8 months in advance.
Right.
Because you're paying for the following year.
Right.
You're not paying for last year's taxes. You're paying for the future.
The future ones, because the seller pays
following
for them
year.
up to, yes.
So it takes a lot of time and explaining, I think, for people to really understand that.
Yeah.
Well, I'm paying it twice.
You're not.
You're not paying it twice.
You're setting up your savings account to pay it next year when it comes due.
Right.
Right.
Exactly.
And a lot of things too people get confused about is when taxes. So taxes are due the summer and the winter in most cities in Michigan. Summer is July 1st.
Right.
August, September. So due July 1st, payable by September.
Oh, right. Yeah.
Totally different.
That is, because some people are like, well, I'm closing in July. I don't have to pay till September.
Well, you do, because they're a
It's due.
lien. They're
It's
lien
due.
July 1st. They're due
Yeah.
July 1st. It's a lien July 1st.
That's what I tell people
Yes,
as well.
yes.
I tell them, listen, it's just because you have a 30-day grace period on your mortgage doesn't mean it's not due on the 1st. It's still due on the 1st, but you have till the 30th.
Right.
Taxes are the same thing. It's due in July, but you have till September 1st or whatever it is.
For summer. And then
It's still due. It's a lien. You have to pay it.
right. Absolutely.
It's
You
one
have to
more
pay
thing you
upfront.
just want to argue with me about.
I know, right? And we promise we're not lying. It is what it is. You have to pay them when they're due.
Right. So we if you have any questions, just give us a call. But that is true. This is the most, I think, confusing.
Right. The escrow account and the proration of taxes also. It's just the taxes in general, because the escrow you're setting up to pay future taxes, the prorations of taxes, which are the next section on the front of the HUD, the seller has already paid the taxes in advance for you. So they paid for the entire year since they were living in that house. Well, now you own that house today. So you're taking ownership of that house today forward. So you have to pay them back. They paid for them.
Right, they're getting a refund.
They're getting
for
a
what they've
refund
paid.
for what they've already paid. They paid it already for you. You have to pay them back. That is the prorations is the hardest part.
Yeah.
For most people.
So just so that we understand prorations, all that is you're paying back
Yes. What has
what the
already
seller
been paid.
has already paid, because
Right.
again, we don't pay our taxes in arrearage. We pay them forward.
Forward in advance.
Yeah.
Right. Exactly.
Good job. Hopefully you understand that. If we talk too fast or we get too excited and you're not sure, you can email me, you can call us. It's not a problem. I would love, and I'm sure Karen would as well,
Absolutely.
To just help you understand. So, all right. So we understand the escrow and deposits and lenders. Okay, go ahead. Title.
Okay. Title. So 1100 section is the title charges. Now this is where your closing fee is, your both policies, your owner's and your mortgage policy for title insurance. And if there's any, e-recording, you're going to see the e-recording fees, the wire, the doc preps here now. So e-recording is a fantastic thing now that we can get your mortgages on record like within like 72 hours.
That's awesome.
It's fantastic. It's wonderful. It helps you, so no liens can sneak in there. It helps us. It covers you more. It lessens the liability for anything getting in between you purchasing and the mortgage getting of record for the lender.
Sure. And now we talk about your title charges. Okay, so title services and lender's title insurance. That is for the borrower, right? This one here is the buyer. So they would pay that because you're checking their title. You're making sure their title doesn't have liens, and we talked about that in a previous episode.
Right.
Maybe just talk a little bit, just briefly, about what that means to have a lien on your title and that you've researched it, and that's what that charge is for.
So you're, for the most part, your seller has had a mortgage. So we have to make sure that we clear that lien off title so that when you purchase the home, your mortgage now becomes the first lien of title. So we have to take care of anything that's on record from the seller, that judgments or anything that could have popped up on that people lien against their property to make sure they get paid. We clear them off, we get them paid, we get them discharged, and then your mortgage policy is stating that your lender is in first lien position.
Right, and that protects your buyer.
It protects them and it protects you as the buyer. The owner's policy protects the buyer, the mortgage policy protects the lender.
Very good.
Yes.
And they're going to do that no matter what. They're going to protect themselves.
They are going to protect. It's their investment. The lender is lending you money. They need to protect their investment. So God forbid you default on your loan. They need to make sure they're in first lien position to get the house as a protection of their investment.
That's right.
Yes,
so they're going to make sure that's done.
Yes, absolutely.
And then we have, what else is under there?
And we have recording charges. So the next is the recording section. So that is transfer taxes. When you sell a piece of property in Michigan, you have to pay taxes, transfer taxes. So there's city taxes and county taxes. It's $8.60 per thousand combined.
Right.
So whatever thousands of dollars you sell the house for, just multiply that by $8.60.
Yeah,
so
and
you have
so people know, it's not just something you just pulled out of the tree. There's a formula for how much this costs.
Yes, this is, yes.
The more house you buy, the more money it's going to cost you.
Yes.
Because you're insured for that amount.
Right.
Yeah, so it's not about just, one company charges this or that. Now, is there a big differential between different title companies on what that dollar amount is?
No,
or is it mandated?
It is mandated. The state mandates all title insurance fees. So there's different underwriters. The difference, it's up and down from different underwriters for costs, very minimal difference in the costs. So it's across the board, it's the title company that, the service that you get from them, the confidence you have in them, and what they do for you to make sure that you have clear title.
Right.
Really,
so that is the only fee that really changes.
It really, that's the only one. The premium, the closing fee can change, but the title premiums cannot change. They are
mandated.
Regulated by the state. Absolutely.
Well, thank you for that. That's good clarification for sure. Okay, then there's government recording charges.
Yep, recording charges. So you have to record the mortgage and the deed. And if there's any death certificates or certificate of trusts or any other deeds that need to be put on record to add or remove somebody, judgment of divorce.
Right.
So that's in that section.
All right. Well, we'll be right back to talk about the rest of the HUD and with Karen. Thank you so much. We'll be right back.
Celebrate the arrival of spring and hop on over to the Orient Center on Saturday, March 29th for the 2014 Bunny Bop. Bring a basket to hunt for eggs filled with candy and prizes. Families can enjoy a pancake breakfast or create fun craft projects. And of course, the Easter Bunny will be there for a special photo opportunity. The family-friendly fun starts at 10 a.m. Pre-registration is required. For more information, visit orienttownship.org or call 248-391-0304, extension 305.
Welcome back. I'm Lisa Dwyer with Mortgage 101. I'm here with Karen Popilek with Transnation Title, and we're talking about the settlement statement. Your money, the HUD from your closing of your mortgage, whether it be a purchase or refi. So we're talking about the government recording and transfer charges.
Right, we left off there. So there's the recording fees, there's the dollar certification fee to the county. The county has to you have to pay the county to put everything on record. So those are all, they're what they charge. We don't, title companies don't add to those fees. That is something that is straight from the county, and that's what we put on the settlement statements, and that's what it costs us to put these documents on record for you. The next is additional settlement charges. Now this section is like any extras. So when you're selling a house, water escrows. So we try to get a final bill.
Sure.
Final water bill will be in here.
Yeah, that happens a lot.
Yeah, you have to have a final bill. Make sure the buyer starts with a zero balance. So if we can't get the final read, which happens a lot from the cities, we hold $200 to $300 from a seller, so that when we get the final read, we can pay it and then reimburse them the balance.
And that protects you, the
It
buyer.
does, yeah. You want the buyer to start with a zero balance, of course. So there are some cities that if they only have a sewer, then you do a proration of it. So there's actually not a water bill, there's a sewer bill, and that where you never have a final. It's always the same dollar amount every time.
Right.
So then we prorate. So that's where you have to explain that a lot to the buyers. And so when they get that bill, they're going to say, I didn't live here at this time.
Right.
Right? So you're right. You didn't live at that house at that time, but at your closing, the title company would have given you a credit towards your closing costs for that bill. So when you got it, that you already were credited when you purchased the home. So you have to remember that. That's something that buyers call. I get a lot of questions on that, and I have to say, remember when we were at closing, and we went over that, because they don't. It's been, sometimes it's 2-3 months later. Yeah, it's very warranted, very good questions, and it's great that they're aware to call and ask the questions.
Absolutely, absolutely. So what else would be on additional? So there's water, sewer. What about any other kind of bills?
Any kind of bills, any inspection fees that were done. Termite inspections, well inspections, water tests, any assessments possibly, occupancy, if there's going to be rent paid for, if the seller has not moved out yet.
That's another thing that happens. I need 30 days after we close because I haven't found a house yet, or my closing isn't going to happen for 15 days later.
Right.
So this is where that part would be.
This is where we put the occupancy, and that we figure out what the and it's usually based off of what the buyer's new monthly payment's going to be.
Right.
So because basically now the seller's paying the buyer rent to live in the house as they sell.
And they don't get to pay. People think, oh, well, I only paid $400 a month for my mortgage payment. Now I have to pay $1,200?
Yes.
That's because you're paying their mortgage payment.
Their mortgage payment, right.
Not your old mortgage payment.
Right, not what you had, and not the great interest rate you had and how much you bought it for so many years ago. You selling your house so you can make money off of it, and now you have to go for the higher dollar amount.
Yeah, so get out of the house. They want you out.
Yes. Move out as fast as you can, if you can.
And they're charging you for it.
Right.
All right, the final page.
All right, so this is carried to the front now.
Yeah.
So, and we didn't balance out the front.
All right.
So I just want to, all those costs are brought to the front.
Yep.
And then you have your total cost for the buyer and the seller. And then below that, on the bottom section, you have all your credits. So the buyer usually puts the earnest money deposit down. That's where it's credited to them. Their mortgage is credited to them. If there's any, the owner's policy has to be, it's charged, credited, and charged.
Right,
because of what we have to do for the lenders now. And if there's any mortgage credits or anything given at this time, this is where it's going to show. And then this gives you your bottom line of what the buyer has to come with and what the seller will be walking away with.
And on page 2, that's where this summary is on page 1. So all these costs that we talked about come to the $32.77, and that's on your first page.
Right.
So it's really just a summary of the rest of the HUD.
Right. Brought to the front.
Yeah. Perfect. Yep. Okay. And then the third page is like we talked about, the good faith estimate.
Yep.
There's a thing here now that we have to compare your good faith estimate to what your final HUD is.
Right.
And if it's off between a certain percentage, you have a problem.
Right. We have to stop the closing.
You'll be under violation of RESPA.
Right. But now everybody has such a great process down with all the lenders for the most part. When we get the good faith, the lenders give us what they gave us the good faith. We enter the actual fees on the HUD that are actuals.
Right.
So as long as you're falling to that percentage rate, you're good. we send this back to the lender. They critique and review our settlement statements that we do for them. It's not just what the title company throws on there and we go to the table. Your settlement statement is reviewed by our processor. I review all our HUDs. So at my company, then the processor at the bank
lender,
gets it,
yeah.
and then their underwriter sometimes reviews it too. So
Sure.
it is looked at so many times before it gets to you
Final.
as the consumer. So the consumer then should receive it. They review it usually too. I would have to say like 85% of the time I do a closing now, probably even 90%. The buyers have already received and gone over their numbers.
Yes.
Which is.
Isn't the new rule coming out? 3 days they have?
They have 3 days. They're supposed to. Yes, it's coming soon. Where the HUDs have to be to the buyers 3 days before closing. Yeah.
Right.
Yeah.
So if you're anxious about closing and it's taken you 30 days to get to this point, wait.
Yes. It will take you longer now.
Well, because they want you, and this is RESPA rules, government, right? They
yes.
want you to look at your settlement statement for 3 days to make sure that you have a chance to go over it with whomever you want to go over it with, really understand it, ask questions, make changes, and then you may go to the closing. So there's lots of great things coming up. I mean, you'll be back on the show because, I mean, as things change, we really want to keep everybody informed.
Yes.
I'm so appreciative that you're here. I think
so
you're
glad you had me.
amazing.
Thank you.
You're just
Thank you.
great. You're great at what you do. You're great with people. I'm just blessed to be your friend and work colleague. So thank you for coming.
Thank you.
All right, everybody. If you have any questions, give me a call, 248-627-7283. I'm Lisa Dwyer. This is Karen Popilek, and God bless.